I just saw a 21% gain in a company most people think is just boring construction equipment. June was a weird month for the markets, but while the S&P 500 dipped, my portfolio stayed resilient. Today, I'm breaking down the moves I'm taking to stabilise my dividend yield, why I'm officially done with crypto, and exactly why my top performer is secretly powering the AI revolution. I'm 18 months into this $100,000 challenge, and I'm well ahead of my original trajectory. In fact, I'm in the process of adjusting my forecast because the pace is accelerating faster than I projected. For those of you who are new here, I'm not a financial professional. I'm just a dad keeping the system simple and documenting every win and mistake to reach $100,000 within 8 years. I calculated that with a monthly contribution of around $500 and an annual return of 14%, it is possible. Seeing my balance now at 13,776, we are genuinely gaining real traction. And if you want to follow along my journey and see if I can actually pull this off, subscribe and hit the bell. In June, my portfolio saw a modest 0.8% gain. Now that might sound like a flat month, but when you look at the S&P dropping more than 1%, that resilience matters. My year-to-date performance is sitting at around 26%, nearly triple the market average. And this is easy to feel good when the numbers are running away with my targets, but staying flat down this month is a win. It means I didn't give back any of my year-to-date gains. To understand how we did it, we need to look into what the companies are actually doing. In third place, we have CVS. It gained almost 13%, a solid defensive anchor, and the analysts are excited about their expansion into the weight loss prescriptions and the virtual $49 clinic program. In second place, we have AbbVie. It gained 15.5%. The market is rewarding their $10.9 billion acquisition that boosts their immunology pipeline, alongside some major FDA approvals, reassuring Wall Street that the dividend is safe and growing. And in first place, we have Caterpillar with an impressive 21% gain. It continues to be a powerhouse that is secretly becoming a massive player in the AI revolution. Their power division is selling billions on backup generators to the data centers, and with a 63 billion order backlog and an 8% dividend hike, it's clear why investors are excited. Third from the bottom, we have Microsoft that saw just over 18% decline. This is a massive swing, but my intrinsic calculator still flagged it as a buy at the beginning of June. Investors panicked over the 190 billion AI spending plan, but now in this monthly review, I can see that this is a temporary repricing and a long-term infrastructure play. Second from the bottom, we have Bitcoin. It dropped almost 20%. I've made a decision. I'm no longer adding to my crypto position. As a dividend growth investor, I want assets that pay me to own them. I'll hold what I have, but if there's a significant gain, then I'm likely to take the profit and reinvest it into a dividend paying companies. And at the very bottom, we have Aurora Cannabis with a decline of just over 22%. This is a position from before I disciplined my strategy, and it serves as a reminder of why I stick to the system. It has produced absolutely nothing from day one, so I'm planning on a portfolio cleanup at some point this year. I'll be cutting the dead weight and putting that capital to better use into better performing assets that are going to actually grow my cash flow. Ten companies sent me a slice of their profits this June, totaling $16.73, and every cent counts. But the heavy lifting this month came from UnitedHealth Group, Simon Property Group and Pepsi. Nice to see 3 different sectors there given consistent compounding payouts that keep the momentum going. My total contribution for this month was $527.79. I've been strategic with the capital, allocating it across my holdings evenly as my intrinsic calculator identifies them. UnitedHealth Group doubling down on a leader in a health space. Dell Technologies strengthening my exposure to the tech infrastructure backbone. Realty Income continuing to increase my position on my monthly dividend payer. And Microsoft. Now I know it's not nice to sit buy a stock and then watch it drop 18% in the same month, but my intrinsic calculator confirms it's still a strong buy, and I'm playing a long game, not the monthly volatility. Let me know in the comments what you think of this situation. I've also officially started building my position with a VEU ETF. My goal is to buy 1 share each month until it accounts for 10% of my total portfolio, then maintain that way via dollar cost averaging. Adding VEU is a way of stabilising my dividend yield and hedging against the volatility that we've seen in the single stock positions. Another interesting development happened with FedEx. I expected cash in lieu for the spin-off, but I received fractional shares of FDXF. I'm holding for now while I wait for the fundamental data to settle and my broker to finally give me my open price. We finished June with $13,776. My original end of the year target was $14,215, and we should smash through that next month. This is exactly why I need to adjust my forecast. The new end of the year target is $16,236. If you want to see if my portfolio holds up as we cross over to the second half of this year, be sure to be subscribed. I've been Steve Williams, and I'm the Dividend Dad. See you in July.